All right, we are live, back in action on this beautiful Friday, man. How you doing, Dennis?
I'm good. I'm good. How are you?
I'm doing good, doing good. Well, thank you everybody for coming in. We're gonna get started. How to buy real estate using DSCR loans. I have my guest Dennis Sherman. He's going to help us understand what needs to be considered when using a DSCR loan. So my name is James Graham. This is one of my first shows. Again, thank you, Dennis, for hopping on. I am a real estate agent, real estate consultant for NJ Capital Realty, and this is my YouTube page channel, James Graham, the real estate consultant. You can find me on the platforms at the Quattro Group. And Dennis, go ahead and introduce yourself, Dennis.
Hi, everybody. My name is Dennis Herman, and I'm the branch manager with American Mortgage Network. Um, we offer wide range of mortgage loans to first-time home buyers, second-time home buyers. We offer refis, conventional mortgages, FHA mortgages, VA loans. Um, we have many different products. So if you need help with, pre-approval, I can definitely help you. Uh, I do my best to try to get you across the finish line. I do work with a lot of first-time home buyers. A lot of people just don't really know where they're at with things, and I can help you, kind of figure out where you're at in the home buying process. So that's just to give you a little brief rundown. I've been in the mortgage business for over 20 years, dating back to 2003. I've worked pretty much in any and every mortgage loan department that's been available. Starting off in customer service, I worked in collections, foreclosures, office of the president, and then I segued over to get my real estate license. And I've been doing this for quite a number of years now as well. So I'm excited about the opportunity to work with James and for you guys to get to know us a little bit better.
Well, great, man. You know what? The purpose of this show, you sent me an email and it said DSCR loans. I know we talked a while back about me purchasing real estate for myself, but I thought when I saw the email, this would be a great opportunity to share with the people, with my clients, because I come across most of my clients are investors, and then also deal with a lot of entrepreneurs. So with that said, I'm going to put up this presentation and have Dennis um, explain what a DSCR loan is. So give me a second. Let me upload this and let's get started. So all right. So DSCR loans. Let's get started. That's me right here. Of course, everyone. We already introduced ourselves. Um, that's my guest, Dennis. This is his information here. We'll be able to share this information in the show notes as well. All right. So the goals and objectives of this show is to reduce as much out-of-pocket expenses while going through the home buying or property process. Understand what is needed to make an educated decision based on your current purchase profile. I'm pretty sure you understand that what that is, Dennis, because we got to understand where we are. And sorry for the background. I'm moving around here, so I'm in and out all the time. So, but yeah, objective number three: to sign up with us, basically to get you going in the process. And I'll let Dennis take over from there.
All right. So uh, this applies to the email that I sent out to James. It applies to first-time home buyers are accepted in this program. Generally, DSR loans, and let me just give you real briefly. It's DSCR. It's debt service coverage ratio. And generally speaking, for the most part, they are, you know, properties that are bought by a lot of investors. They generally segue to DSCR loans for the most part. But the email I sent out to James, it did apply to someone that's looking to, buy a residential home. Um, as he stated, first-time home buyers are accepted in this, and uh, there's no reserves required with that. With a 75% loan to value ratio, that's LTV. We offer fast turn times, 2 to 3 days for approval or pre-approval, and then 1 to 2 days for conditional review, which would be with our underwriting department.
All right. Before we move to the next slide, could you help people understand what it means? What does LTV mean?
Well, LTV is going to be the loan to value ratio, and that's generally, as you can see there, 75% loan to value ratio. That's basically saying you are financing 75% of the remaining loan. So say like, and it just makes it easier. I always use examples of 100,000. So 100,000 would be the purchase price of the home. You would put 25% down, which would be $25,000. That would be your down payment, and then you're financing the rest of the loan, which would be 75%. So that's where the loan to value ratio of 75% comes into play.
Now, it doesn't matter the comps of the home. Is it based upon the purchase price or the actual value of the property? Or,
Well, it's going to be based upon the actual value of the property.
okay, so
Comps are not going to be included in that. It's generally going to be your money that you're putting down to finance the remaining balance of the loan.
okay, all right.
All right, so here we have the 12-month bank statement program. So you can now qualify up to 90% of deposits in bank accounts with a max 90% LTV. Self-employed and 1099 borrowers. Like I said, this is generally their DSCR loans are generally geared towards a certain type of consumer. It's generally, as you can see here, self-employed. It allows someone that doesn't, maybe not want to go through the whole process of getting qualified. Maybe your credit isn't really up to par, so you might have low credit. So you might want to, but you have the means to purchase a home, but the government might look at your credit and say, or even a lender, we might say, your credit's not up to par. So in a sense, you're almost bypassing the credit process in a sense, where we're just going to base it upon your income that you're generating in order to be qualified for the DSCR loan. As you can see, in this particular case that I sent out, we did have a minimum FICO score of 575 with this. So, and as I stated, with this particular program, it helps someone that has, low credit that doesn't even meet the standard. The general standard for doing a residential purchase would be a 580. Here we're allowing at least a 575. But you have to have the other qualifications to show as far as like your income, ability to pay back is very, very strong in this particular case with the 12-month bank statement program.
So this is similar to. I'm not gonna. It's close. I'm gonna say close to getting business credit, um, because typically they want to see a certain amount of income each month before issuing business credit. Is that correct?
That is
So,
correct.
with that said, is there a certain amount that they want to see based upon? Is it is there a ratio based upon the amount that wants to be borrowed versus how much you have coming in as a 1099 or a self-employed individual? Is there a
So
ratio?
there is a ratio. So, and lenders generally like to see a 1.25 is a very, very strong ratio. And by that, I mean, we're taking your annual gross And in a lot of cases with the DSCR loans, it would be the annual gross rental income that you're generating over the debt obligations that you have. And as long as those ratios are meeting a 1.25, a lender will see that as very, very strong. That Now that's not to say if you have a 1, you wouldn't qualify. Generally, it's between a 1 and a 1.25 like I said, 1.25 would be considered very, very strong. A 1, you could still potentially qualify. There could be some different factors that go into it, but anything less than a 1, you might not are going to meet the criteria for the DSCR loan.
Now you mentioned rental income. Is it rental income or is it just general income for the self-employed individual?
Well, it's going to be so generally with like I said, in most cases with the DSCR loan, they're using it as like an investment property. But
Okay.
in this particular case, if you're looking for residential, then we would look at, what your income is versus like your debt obligation.
Okay. Okay.
All right, so here we have um, the no ratio DSCR with a max LTV of 65%. So again, using my first example of $100,000 as your starting point, in order to get to that 65% threshold, you would need to have $35,000 as like a down payment to get to that 65% threshold.
Mm-hmm.
Uh, Foreign national max LTV would be 75%. And with the foreign national, that's more or less with maybe someone that doesn't have like a social security number. So they might be using an ITIN number, which would be an individual tax identification number. And in this particular case, no FICO would be needed. Generally speaking, um, condotels, Airbnbs, and daily rentals are allowed with the program that we have. Generally speaking, there are not too many lenders that offer those as an option. But with the email that I did send out to you, James, we're allowing it in this particular case with the program that we have. So it's a very good program to get on board with, considering most lenders will not offer the Airbnb and the condo hotels.
So a condo tel. Okay, that's my first time ever seeing that term. Um, so with the rentals, so basically, can you explain to me, because I have a situation possibly pending with a current client. They may be buying a property with the renter already in there, and they already have a lease intact. Now, is all that information considered when purchasing the rental in
Yeah,
regards to
we
like rent is coming in and the debt being serviced? And could you kind of explain the process with buying a property with the rental already in there?
so with the rental already in there, you're going to use that income because it's generally a lot of cash flow. So we want to see a lot of cash flow coming in versus your debt that you're paying out. So as long as you have that strong cash flow from the rental and the renters providing you on a monthly basis versus the debt, then you would be a strong candidate for the DSCR loan.
Okay, all right. And I see that they can close in the LLC. Um, yeah, okay.
Yeah, they can close an LLC, but it's not required. So that's available to you for those that have like their rentals in an LLC. A lot of people will put a lot of their businesses under an LLC. So we do allow it, but you don't have to. And that's, I wanted to make that clear. I don't want people to think like, oh, it's a requirement to have my businesses or even your investment properties mentioned in the LLC.
There's one thing that I forgot to ask you in regards to interest rates. Uh, the interest rates won't be as low as, well, I guess a buyer, a personal buyer, because right now the interest rates are fluctuating between 6 and 7
Yes.
for personal use. So for a DSCR loan, what are the interest rates? Typically be. I heard that they're in the double digits, typically.
Yes. So a DSCR loan, typically speaking, they can be a little bit higher end. They can go as high as 10, maybe even 15%, depending on your financial strength. Uh, that's maybe one of the downsides of a DSCR loan is that the rates are a little bit typically higher, but the reason why they are high is because you are kind of bypassing the whole,
Red tape.
with your credit. Uh, right. So we're just using basically it's not as stringent, it's not as strict as regular lending. So with that, in order to get something, you got to give a little something. In a sense,
Right.
that's just
Right.
the way, yeah, how it works. But we're bypassing the credit check. We're bypassing maybe in some cases tax returns. We're just strictly basing it upon your proof of income, your cash flow, bank statements. So it's a good loan to have when you do have the financial strength, but you might not have everything in order as far as like your credit is concerned, or even your taxes. Some people, I don't want to name drop anybody, but some people might not have. I've seen people that might skip a year or two with doing their taxes, so and then they have
Wow.
to go
Okay.
back and have them redone. So sometimes people might not have everything in order, but they have the funds and the means to do it.
Right. Okay. So what is ITIN? What is that?
So ITIN, that's the what I had mentioned earlier with the identifying tax ID number. That
Oh,
might be for someone that does not have a social security number. So you might have someone that might be from a different country, and they're uh, in order to be put into the system, they're presented with an ITIN number, which would be uh, equivalent to a social security number. But for anyone that's coming from a different country, they might be an adult coming over, they might be in their 20s, maybe even a teenager, to an adult that wasn't born here. And with the government, everything, they want to keep track. So in order to keep track, you're presented with a number. All right, I have a social security number. I'm sure, James, you have a social security number too. So if you have someone that, like I said, came over and they're in their mid 20s, or even a teenager, they might come over, they don't have a social security number within our system. So they're presented with an identifiable tax number.
do you get these often? These type of loans done often?
I might get one every 2 or 3 years. I have a guy right now where I was doing his loan a couple of months ago. And, we're still working on a couple of factors to get him up to par. But he presented me with an ITIN number. So they're
Okay.
not that common. I don't come across them that often, but very far few between. But I have seen situations. Like I said, I'm working with someone right now, and that was we're a couple months in. The only thing that's
So
hurting
you so
him
you
is
so
his
you
income.
close.
Go ahead. I'm
Have
sorry.
you closed any ITIN deals?
I've closed
Have you
one.
closed any ITIN deals?
I've closed one so
Okay.
far.
Is it?
Yeah,
Oh,
just only
is it
one.
is it difficult? Is it more difficult than the standard?
I don't. No, I haven't found it to be any more difficult or any more challenging.
Okay,
They're just border around the same. It's just about I would say it's you're just providing with a little bit more documentation.
got you.
But other than getting the approval and meeting the needs, it's pretty
It's the
much on
same.
par and the same.
Okay, all right.
Yeah.
We'll go to the next.
All right. So the ability to repay in full. So and this is where the cash flow that I was referring to comes into play with that 1.25 percentage. We want to make sure that you have enough income and enough means to pay back the loan that's going to be presented to you, especially since we're bypassing the credit. In my business, credit is key. Credit is everything. Your credit is almost like your word. When I look at someone that has a 700 or even a 680 credit score, I'm like, wow, it's amazing. It's easier to get lending when your scores are that high. So,
Mm-hmm.
with that said, the equivalent to that in the DSCR loan sense would be your cash flow. Your cash flow is almost like having a high credit score. With that 1.25%, that's the equivalent of having maybe a 680 credit score. Lenders are going to feel very comfortable with someone that has enough cash flow that's going to be able to pay back these type of loans, considering you're bypassing certain criteria that normal residential lending would afford you.
Here's what I forgot to ask. So I understand the investment loan products, the interest rates are like in the double digits, 10, 13. Now, what about the individuals that use this style of purchasing with personal, um, to use it as a personal purchase? Does it work with that?
It works with that. It's rare, but it does work with that.
And
Um,
do they get the same interest rates or?
yeah, they would be afforded the same interest rates.
Okay, so
Um,
it is at 10, 12, based upon what's going on.
yeah, they tend to start just a little bit higher than the normal. Um, but in hindsight, interest rates being at 10 is not as bad as most people, make it out to be. I get it. It's, everybody wants, you know, 2 and 3%, but those are not really the market right now. This is the new market. So
Yeah,
I wouldn't look
yeah.
at, no, go ahead.
I was gonna say that a very long time ago that was the norm, 10,
Right.
12, 13%. So that was the
Is that
norm a very, very long time ago.
exactly? I did an open house with one of the customers about a year back, and he was like, "Why is everybody freaking out about the interest rates being this high?" He was an older gentleman, and one of the things he said to me was, he was like, "I was an adult in the '80s." He was like, "Trust me, in the '80s, they were in the '20s."
Wow.
And the same thing I said. I said, "Oh wow." He said, "But keep in mind the houses were a little bit obviously cheaper." But he was like, "The fact that you were in close to the '20s, that was the norm to us." And he was like, "I would have give anything for the rates to be." And a real quick funny story: I had posted something on one of my Google accounts that I have for business, and I remember everyone was freaking out about the rates being at 5% in 2020. And the one thing I put on there, you can even look at it now, it's dated. I said, these are the lowest rates are going to be. Now's the time to buy. And I remember I had a lot of people that I had in my pipeline. They kept saying, I'm waiting for the rates to go down. Well, fast forward 4 years later, here we are. Rates are still a little bit higher. They're actually higher than they were in 2020. And those same people, I went back to them. I said, I bet you wish you had listened to me and took advantage of that 5%, which you thought was a high rate. But actually, a 5% is looking really good right about now, right?
Yeah, it's better than 6, 7.
Yeah,
Yeah, I
exactly.
have a few clients that's in that same boat, and you forget about the past, and you get real. you feel real good about these 4 and 3%. You know, um, you got to catch it when it's time.
Yeah,
So, but yeah, that's just the market.
that's the market now. Yeah, for sure. And like I said, in 2020, everybody was going crazy. Oh my God, rates are 5. And I'm like, this is the best it's going to be for a long time. Take advantage of
Yeah,
it. And no one wanted to listen to me. So
yeah.
here we
So
are.
the 2 months of statements of qualifying account. Can you break that down for me?
Yeah, so what you want to provide is, 2 months of your bank statements um, that you have, whether it be checking or savings. And you want to make sure you have a statement that's going to be reflective of being able to, pay back a portion of the loan just in case if anything happens. Well, that's as a lender, that's what we want to see. So we want to see strong bank statements in there, not a lot of, I see a lot of bank statements. A lot of times people will have a high starting balance. And just to give you an example, they might have a high starting balance of 20,000. And then by the time you get to the ending balance, it says 1,056. And I'm like, where are all these,
Where the
where are
numbers go?
all of the,
Where the money
these
go?
withdrawals coming from? Like, what do you
Yeah,
do? What are you doing where you're spending almost $19,000 in, any one given month? I mean, and then they're trying to rebuild it and replenish it back. So those bank statements, we want to make sure we're seeing, you can, and not to say you can't withdraw anything, but we want to see,
consistency.
consistent. Yeah, maybe you're taking out 100, 200, but putting it back as well. You want to see that. So you want to
Right.
get those strong bank statements to make sure you're qualifying for the account.
Foreign nationals. What is a foreign national?
So foreign national would be, like I was saying earlier, as far as someone coming over from, a different country. Um, they're not of this uh, of this of
They're
this
not born in the
country.
States.
Yeah, so they're coming over from, it could be from Italy, it could be from Spain, it could be from anywhere in Europe, so that would be classified as a foreign national.
So they can get a loan with no income, job, or credit.
Yeah, so it's priced at
Or
700
with the
FICO.
700 FICO score. Okay. If they got a
Right,
700
yes.
above, they don't need no proof of none of this stuff and they'll get a loan. That's crazy.
Yeah, well, with the program that we have, and as you can see there, it's got a max LTV of 75%. And but the refi would be 70%. So we're looking at least for 30% down. But yeah, with the program, like I said, it's very, very, it's limited time. I doubt I would get anybody that's from a foreign national that would be presented with this or even come to with this particular loan. It's very, very rare, but we would allow it if I was to get a phone call from someone, a foreign national. So
Okay.
we would definitely allow it.
And again, this is for rental investment properties.
Yeah, this portion of it would be for the rental portion of the property. You're just showing that strong cash flow coming in, so that way we can, present. Uh, you just want to present that you have the ability to buy back or pay back the loan.
Mm-hmm.
All right, so here we have the small balance multifamily home. It's a loan amount anywhere between 250,000 to 3 million. We will allow anywhere between 5 to 24 units. As you can see here, the FICO score, because of the loan amount and because of the amount of units, we would require a little bit higher FICO score, 625. And as you can see there, the minimum DSCR of 1.0. And that goes back to what I was saying earlier. 1.25 shows really, really strong. You want anywhere between 1. And if you get to a 1.25, that's, like the equivalent of someone having a 680 or set or above credit score. But the minimum we would allow there is 1, with no deposits required.
Okay, that's interesting. So all my
Yeah,
clients out there looking to purchase multifamily properties, let's hop on something real quick. Let's do that. Let's get this done.
yeah, for sure.
And
Well, here I put on here like kind of a little bit of a breakdown to kind of give you an idea of where, uh, as a lender, what we're looking for, with your ratios being very strong. It's your housing ratio. So it would be the principal and interest, the taxes and insurance, which is PITI, and your house note divided by your gross monthly income. And that'll give us a ratio of, it'll let us know where you're at with your expenditures on the particular house that you would be looking to, purchase. Uh, right below that is the total debt to income. So again, you want to keep your debt low. If your debt is low, and it really helps with the lending. So with the total debt, you're dividing your total debt divided by your gross monthly income. And then we take those two and then we combine and we make it gives us a ratio. Uh, Sometimes you can have a ratio of, say, let's just say for argument's sake, uh, 28 over 36. Those are pretty good ratios to have. It gives us an idea of how much you're making versus how much you're putting out. So when you're buying a house, we want to make sure you're making enough without having so much expenditures, because we want to make sure that you're able to pay back the mortgage loan. And obviously with these ratios and your credit being really good, it helps us determine your credit worthiness for purchasing a home. And that's key. That's very important. You just want to be able to show a very strong ability to pay back the loan. It's a big investment. So we want to make sure if we're lending you that money, you're going to be able to pay it back.
and that's it. Again, Dennis, thank you for explaining the process with the DSCR loans. It seems like it's a lot lenient versus your standard home purchase or loan product when it comes to purchasing real estate for personal use. Um, and uh, and again, thank you for hopping on here today and showing us information that is needed to learn how to purchase real estate the right way. So here, guys, you have his information. You can give him a call, and also you can contact me via social media, all social media platforms. Information will be in the show notes. With that said, sign off. And again, thanks for being with us today, Dennis. And I can't wait to do it again and hop on the next call. So I appreciate you, man. And let's
Thank you.
let's do it again.
Yes. I look forward to. Thank you again for giving me the opportunity to explain to your client base and the opportunity for the DSCR loan. As you can see, my contact information is there. Me and James are here to help anybody that is looking to obtain home ownership. A lot of people are scared, and I'll be the first to tell you, there's nothing to be scared of. It would be to be a homeowner is an exciting, and it's a great thing.
All right, all right. Well, what we'll do, we'll sign off here. And again, man, to the next one. You take care. You have a good weekend. All right.
Thank you. You as well, James. Thank you.
All right. All right. Well, again, folks, this is James, Real Estate Chief Client Service Officer, and I appreciate you for hopping on my platform. Um, the Quattro Group, James, Real Estate Consultant. I will be putting out a lot more information that will help you understand where you need to purchase real estate and other products that helps you along the line. Again, have a great weekend.